Get ready, guys. So the IRS is charging taxes for any PayPal, Venmo, or Cash App sale that nets you at least $600. Don't you just love how they cut out the parts where they look deeper into corporate tax fraud? So instead, they're coming after us, the little guys. Check this out.
It was a summer of record-breaking ticket sales for live events, and fans, of course, wanted to pay big money for people like Beyonce, Taylor Swift, Lionel Messi. But all those profits by selling their tickets instead of actually going to the show are something the IRS is paying very close attention to. Nick is here with details.
Yeah, Adrian, you know those days when people would sleep out or whatever, get the tickets and then resell them for thousands over their original price? Those days are gone. You can still do it, but expect to pay up. A new rule from the IRS is punishing those who resold tickets for more than $600 in profit with a penalty tax. Now, it comes in the wake of big name concerts in 2023. For example, Beyonce's Renaissance Tour and Taylor Swift's Eras Tour, where the average ticket price sold on StubHub for just under $1,100. On SeatGeek, the average was over $1,600, and the best seats sold for $300 to $400 more than that. Now, the way it used to work was like this. Ticket resellers only had to report earnings if they made more than $20,000 at least 200 transactions a year, right? That's now down to just $600 over the ticket price, regardless of how many transactions you have in a year.
So yeah, guys, better watch out. Anybody who eclipses that $600 threshold can expect to receive a 1099-K form, which is a 1099 tax form. And this applies to anything from concert tickets to a side hustle on Etsy or even Venmo, eBay, you name it, right? Reimbursements not included though. So they've already reported that the IRS is bracing for up to 44 million of these forms for the 2023 tax year, which will be roughly 4 times as many as the agency received back in 2021. And surprisingly, the $600 threshold was supposed to take effect in time for spring 2023 tax returns, but the IRS delayed it in December since the payment apps couldn't get it ready in time. Don't worry, they didn't do you or me any favors. Now, when the change was first approved, Treasury Secretary Janet Yellen, she said that it was aimed at cracking down on tax cheats and the wealthy. Yeah, the wealthy's making a whole lot more than $600. So what's the real deal here? But Republicans blasted the new rules as government overreach. You heard that right, guys. Government overreach. Now, I'd love to hear what you guys think about that. So earlier this year, the House Ways and Means Committee approved a bill that would restore the old $20,000 threshold. Senators Sherrod Brown and Bill Cassidy also proposed a bipartisan effort to raise the threshold to at least $10,000, but it's so far been stalled in Congress. I mean, it's not just me that this is surprising to, right? Now, at this point, if parents advise their kids to sell lemonade up to $599 because of the threshold, the IRS will probably accuse them of structuring and actually seize the entire $599. You know what I mean? Maybe it's time for the IRS to be audited. What do you guys think? Anyway, make sure you don't miss the coming developments on this story. Subscribe to the channel and also tap that notification bell right now. I really appreciate that, guys. And hey, if you like what we're doing here, the information that we're sharing, keeping you guys in the loop with everything that affects us, feel free to show some support, drop a like for the video, and totally check out some of our channel merch down below. But let me tell you guys, your engagement with the channel is really what is keeping the YouTube lights on. Appreciate that. Now, before this year, you may have already received Form 1099-K if you had more than 200 transactions worth a total of $20,000. Maybe you had a side hustle or a small business doing something, leveraging PayPal, Venmo, or other Cash App related payment apps. But the 2023 threshold is just $600 now. And even a single transaction could literally trigger this form from the IRS. So yeah, you can just imagine that the change is expected to result in a flood of Forms 1099-K in early 2024 when taxpayers typically receive so-called information returns from employers and other financial institutions. Duplicate copies end up going to the IRS. Don't ignore these forms, guys. Now, just to go ahead and clarify here, so the threshold doesn't apply to personal transfers on apps like Venmo and PayPal, like maybe sending a friend or a family member money, your kid's allowance for personal. But experts are already predicting that some of these taxpayers may now receive a 1099-K by mistake. So more headaches at tax time. And given that just one transaction above $600 is enough to trigger the form, even somebody who makes a one-off sale of, say, I don't know, like an old couch or something like that, maybe some hot concert tickets, could very well find themselves with an extra tax document to have to worry about. Now, I can absolutely see why this could very well be a cause for concern, and it's likely to affect innocent Americans and taxpayers. Let me share an example with you guys. So imagine you sold a bunch of old clothes for a total of $600. Maybe you're cleaning out your basement, your attic, your garage, whatnot. Now, in this scenario, you'll receive a tax document stating that you have $600 in taxable income. But here's the thing, guys. You only need to pay taxes on your profits. So let's say you originally bought those clothes for like $1,000 when they were brand new, and now you're selling them for $600. That means technically you incurred a loss on this transaction, and you shouldn't owe any taxes because you're taxed only on your profits. Make sense? So now I'm starting to wonder, maybe this tax form is actually a good idea. Because if you took a loss, can you not claim $400 as a tax deduction? Maybe a possible tax credit? You might want to check with your tax advisor on that. I'm not a tax advisor. I'm not a tax attorney. This is not tax advice. But here's the catch, guys. You actually need to have the actual receipts to back up your claim. So in this case, if you get audited by the IRS, they're going to ask you for the receipts showing what you paid for those clothes. So if you claim that those clothes cost you $1,000, you better make sure you got that receipt proving it. Now, if you can't provide those receipts, the IRS is going to say that you got clothes for free and you made $600 worth of pure profit, which at that point could very well be subject to taxes. Now, honestly, who keeps those receipts for old clothes that you probably bought years ago? Unless you actually bought them on a credit card, and then more than likely you can kind of download those old receipts or old credit card statements. But it's really sad to say, guys, that's just how the IRS operates. In their eyes, it's your responsibility to prove your innocence. And so essentially you're considered guilty until you can prove evidence that you're innocent. It might not sound fair, but that's pretty much the way the system works. At least the IRS system, that is. The problem that many people have with this is the idea that paying the government to sell something that you've already paid tax on just feels a little bit beyond criminal. I mean, honestly, they can go kick rocks. You pay taxes to get your paycheck, right? You then pay taxes to buy the item that you bought years ago, and then you're gonna have to pay taxes to sell it at a loss? Really? I mean, really, everybody needs to contact their congressman right now and tell them to rescind this new directive. The lower 1099K reporting thresholds has especially been controversial with the increased scrutiny to the IRS, especially among online sellers, gig economy workers, and others who worry about confusion and higher taxes. Now, are they really taxing the rich here? It sure doesn't sound like it. Now, if you're wondering when this change happened, well, you guys remember Biden's American Rescue Plan back in 2021, right? Yeah, that. So it's actually been a long time coming, but the payment apps, they needed to put up the infrastructure for such a huge tax shift. And given all that time, lawmakers are looking to change course on that decision, affecting millions of Americans. The Republican-led House Ways and Means Committee in June approved legislation to revert the reporting threshold back to 2022 levels. Now, there's also proposals in the Senate, including the Red Tape Reduction Act, introduced by Senators Sherrod Brown of Ohio and Bill Cassidy of Louisiana in May, which wants to raise the threshold to $10,000. Definitely more reasonable than $600, I have to say, but I mean, the original threshold was $20,000 for goodness sake. Tax professionals are already worried about it. In fact, the American Institute of CPAs came together in June to renew their support for raising the reporting threshold to avoid what they're predicting will be a very significant confusion in the tax system. So basically, they're saying the whole thing is just going to be an administrative burden on taxpayers and the IRS, especially if Forms 1099-K wrongly include personal transactions, like for gifts or reimbursements. So even before that, they said that Form 1099-K has always been problematic. They said that even in its older iteration, with the higher thresholds and a number of transactions, a lot of times it just did not accurately reflect what should be taxable income. For businesses that are selling goods, Form 1099-K may not correctly reflect returns or adjustments. Then, of course, there's the problem in the IRS saying that you owe X and then you're saying Y on your tax return. This is more than likely going to trigger more scrutiny, which is a whole nother level of time, expense, and aggravation that people don't need. More than likely, it's going to trigger some degree of an audit. I mean, tax season's stressful enough, right? One thing that these news outlets really don't talk about. So here's something that's really important to keep in mind, guys. And I want to bring this up because it's very often overlooked. When you're dealing with your taxes, whether you're using TurboTax, H&R Block, an accountant, maybe you're doing it yourself, maybe you side hustle man on down the road that does taxes, your hookup man, you're likely going to end up spending more money on tax preparation fees if you have those extra 1099Ks. You see, these tax prep services and professionals, they tend to charge you based on the number of forms, schedules, or activities involved. So if you got a 1099K in the mix, be prepared for an additional cost. Now, to give you guys an idea, if you're using TurboTax, it could easily set you back an extra $80 to $100, give or take. But hey, you don't have to take my word for it. You can just check it out for yourself. And if you're working with an accountant, well, the extra charges might be even higher. Now, just to prepare you guys, here's what you can do in anticipation of that 1099K reporting change. So first, even if you don't receive a 1099K form, business payments are still taxable. And experts say it's a good time to start getting organized. Now, regardless of the payment platform, Cash App, Venmo, PayPal. Important to be familiar with the systems. Know where to access your payment information and to keep your account open. Their biggest piece of advice, make sure you get the payment information as soon as you have it available, which can easily save you some time during your next filing season. There are some loopholes to the law too if you want to get into it. And no, it's not about doing something illegal. It's more about using a different payment method to avoid certain tax reporting. So like imagine like you're having a garage sale and the person buying your stuff wants to pay through PayPal, Venmo, or Cash App. Instead of going that route, you can pretty much just circumvent that altogether and ask for cash, even crypto, or apps like Zelle or Chase QuickPay. You see, platforms like Zelle payments technically don't fall under the category of third-party transaction processors, and that is what is triggering the IRS to issue a 1099-K form. Zelle payments, for example, they facilitate messaging between financial institutions, but doesn't hold accounts or even handle fund settlements. So it doesn't fit the IRS's definition of a third-party payment processor, so that makes it exempt from those IRS reporting rules. So yeah, what all this means is that Zelle won't report your transactions to the IRS and you won't receive a 1099-K form. So if you're just moving money around, for personal reasons, you're pretty much in the clear. Now, of course, there's always a chance of reporting errors, which could easily drag you into some financial mess of its own. But that's something that's realistically, unfortunately, going to happen to some people. And honestly, guys, if you're earning some extra cash through side hustles, freelancing, coaching, tutoring, or any kind of work like that, this could seriously impact you. In fact, it's expected to affect millions of Americans. So it's definitely something to be aware of and to get a handle on. And I'm pretty sure that some of you guys out there who've had to deal with an IRS audit or maybe even been through one yourself. But feel free to share your experiences in the comment section down below. That's how we learn about this kind of stuff and how the system works, right? Believe me, these IRS audits, they can drag on for months and even years, and the stress just hangs over you the entire time. Not to mention, some people say these IRS agents, they can be pretty uptight or even take things to the extreme. Now, I'm not saying that there aren't any reasonable IRS agents out there. I'm pretty sure they exist. But the chances of getting one of those may be pretty slim. Most of the time, it just kind of feels like they're flexing their own power. But let's imagine just for a moment that you luck out and you get an understanding, sympathetic IRS agent. Even in that scenario, you're still going to have to deal with the emotional toll and the time that it takes to go through an IRS audit. You know what I mean? It ain't fun.